Yes, dear friends, we can discuss regarding the non-banking financial institutions. I already mentioned the financial institutions and banking institutions. Non-banking financial institutions. So many non-banking financial institutions are there. So many are developmental organizations, developmental institutions. So many are refinance institutions. So many are insurance institutions. All these are comes under the non-banking financial institutions other than banking. Banking means accepting deposit and lending loan. Then earlier I told you that functions of RBI, but I not mentioned the functions of bank. Functions of bank easily that you know that. Functions of bank simply that I can refer here itself. What are the functions of bank? Very simply, they are accepting deposit and lending loan. One, transfer of money. We can transfer money to any place. Transfer money through the bank. At present, so many transfer systems are there. Earlier, that check, draft, money transfer, so many transfer methods are there. At present, so many advanced digital systems are there. That is RTGS, real-time gross settlement, NEFT, National Electronic Fund Transfer, and so many methods are there. All these are the easy methods for transferring money. These are also a functions of a bank. And together with that, we can exchange currency. Everything is possible. And discounting of bills, that also available. And overall financing, we can avail finance from the bank. And credit cards. Credit card means usually that we can avail some credit facility. And ATM cards, we can utilize those cards for any time withdrawing money. And that ATM cards we can utilize. These cards also can be used for purchase of products. All these that we can utilize. And these cards are also linked with the international credit card or international card system. A network is there. That Visa Electron and MasterCard. Now all these union with these institutions, definitely that we can also utilize these facilities globally, internationally. Everywhere we can utilize these cards. And these are the later facilities that through the bank that we can avail. That is why that. And foreign exchange also another very important role of these banks. NRI accounts, foreign currency, and FCNR accounts, foreign currency, non-resident accounts. All these can be opened through these banks. Then these banks are functioning as a foreign exchange dealer. RBI is giving license to these banks as foreign exchange dealer. After getting this dealer license, that each bank can function as foreign exchange dealer. These are the major functions of banks, but already I earlier that mentioned the functions of RBI, and these are the simple functions of primary functions of banks. 2 to 3 functions we can mention whenever in interview or somewhere they are asking some questions. Minimum 2 to 3 points that is required. That much time we are getting there. Definitely we should know we should analyze what exactly the functions. That we should know that. Then any type of questions we can answer. Okay. Then refinance institutions. What is refinance? Financing the financier. Actually, banks are financiers. Suppose banks are in need of funds. For a particular year, a bank is deciding to advance 1,000 crores in agriculture sector. But within 6 months, the entire fund is over. That sector what they allocated are over. Then they have to present the public that they are already over, that next year, up to next year, you have to wait up to next year. Never. For development of the agriculture, these refinance institutions are, if the banks are in need of funds, they can avail refinance from the concerned organization. In the case of agriculture, NABARD, National Bank for Agriculture and Rural Development, a central government is there, central organization is there. Every year, every state and every district are having offices. NABARD is having offices every state, and every district also NABARD is having an office. NABARD office is there. Through this NABARD, that banks and financial institutions can avail finance for their requirements. Therefore, why that they are taking the benefit of taking finance from the financier? Actually, that they are getting some interest spread. Interest spread means difference between the lending rate and their available rate. The difference, how much they are getting and how much they are paying. In the middle, that they are getting 2.5 or 3% they are getting as margin or profit. That is why they are availing refinance from this organization, and they are, by making use of their machinery, their manpower, their branch, they are distributing to the public. Thereby an overall period, the entire period, public is getting finance, either by refinanced money or direct money, or any way that they can avail finance from they can give finance to the public. That is really the refinance. Which are the areas that refinance is getting to the bank or giving to the bank? Mainly that what exactly industrial refinance is getting. SIDBI is a major refinance institutions. Direct finance and refinance also they are providing. For huge finances, that directly a person can avail SIDBI finance. And through the banks are also that we can avail SIDBI refinance. And award, agriculture. Agriculture, the major portion, that 40% of our total priority sector advance, a statutory limit is there. 18% should be given for agriculture. Every bank should have a statutory target is there. 18% should be given for agriculture. These agriculture 18% that banks are distributing, if they are in need of funds, they can avail refinance from the concerned refinance institution. That is NABARD. That agriculture sector, this refinance is there. Then housing sector. Housing means that always that everybody need house, first house, then certain persons that second house also they can avail. For all these housing sector, promoting housing sector, so many tax benefits our government is offering all the years. For availing all these things, that definitely there should be that availability of the finance from all organizations. All the banks, financial institutions are providing this housing finance, and separate wing that certain banks are offering, LIC housing, SBI housing, and so many housing, Canara Bank housing. So many housing wings separately they are organizing, subsidiaries they are organizing, they are deciding, they are preparing. Through these house refinance organizations, we can avail housing finance. They can also avail housing refinance from concerned higher authority, HDFC, a major housing finance organization, housing refinance organization. They are functioning as both financier and refinancier. To the banks, that HDFC is refinancing. And National Housing Bank also, an apex body is there, National Housing Bank. HUDCO, Housing for Urban Development. For urban development, a separate organization is there. That also refinancing. That refinancing organization also financing public, finance to the public. These are the housing refinances available. These refinancing companies are certain percentage they are giving to financing companies, that it may be that 5 or 6 or 7. Then they are again that plus 2% or 2.5% margin, they are also financing. There is housing finance, housing refinance. Then export import also, so many finance, the Exim Bank is there, an apex organization, Exim Bank is there, Export Import Bank of India. For export finances, these organizations refinancing to the banks. Then insurance also, that certain banks are reinsurance organizations are there. Usually that LIC of India, Life Insurance Corporation of India. Then after for general insurance already that general insurance and another 4 organizations are there. All these insurance companies are availing reinsurance from the other one. Reinsurance is insuring the insurer. That means that a company is taking insurance, that again they are taking reassurance. That is providing. For mutual, actually that all these are insurance simply means sharing of risk. Actually they share the risk. They are dividing the risk of this, what exactly the risk they are going to happen, that they are sharing. Then definitely that will not affect the entire system of that organization. Therefore, these refinance organizations are also very strictly, they are observing the NPA percentage and everything, and repayment facility and everything. All these very aware that mainly the entire bank finance is depending upon the repayment ability. For measuring the same, a CIBIL, a Credit Information Bureau of India Limited, actually this organization is evaluating the entire customer, and they are giving CIBIL score. This CIBIL score is the criteria for giving finances. Okay, thank you.